Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Attila Pinke, and I'm back to the office after 1 month in Greece. You could enjoy my holiday videos, but there was this bug noise always in the background. Doesn't matter what microphone you have used. I extra bought a microphone just for this trip to reduce background noise, but you couldn't do anything with these buzzing bugs in the background. So unfortunately we had that. But now I'm back to studio quality again. And yes, in the last month I had 3 videos during the holiday because of the bad internet connection in Greece on Monday, Wednesday and Friday. But now I'm back to the normal, so every single weekday I bring you the freshest cryptocurrency and blockchain news. Hit the like button if you like this kind of thing, and also subscribe to this YouTube channel if it's important for you to stay up to date. And by the way, then let's see what I'm going to talk about in today's video. So yesterday the data came out, and in the US we are officially in recession. But are we really? Okay, so let's talk about that. But in Europe, we are actually not doing so bad if you're looking at the Eurozone. Then on Wednesday, I had my last video in the morning, but in the evening hours, European time, but in the US, it's a different time zone, definitely. The rate hike data came out, and the Fed increased the interest rate by 0.75%, and the market was and is bullish. And then we have the third news. It's all about phishing risk for Celsius clients because their emails were leaked. So guys, all this in today's video. And don't forget, to subscribe to this YouTube channel if all these things are important for you. But I'm not going to wait longer. Let's jump into the market. But I just realized I have accidentally closed that window. But now it's open. Now I share it. And yes, here you can see that Bitcoin is actually up in the last 24 hours, 4.2%, while Ethereum is up 5.7%. And when we're looking at the last 24 hours, then we see Optimism up 49%, Ravencoin up 40%, and Ethereum Classic is the one which is up 27%. Many altcoins doing very, very well. And no losers to be honest with you. So yes, when we're looking at the Bitcoin chart, then we can see that, look, we have an increase since the 26th of July. We're going up and up and up. And interestingly, I'm going to talk about this data which came out that we are in a recession if we're looking at the last 2 quarters GDP. But despite of this, the market doesn't care, and it's going up. Also interesting that the Federal Reserve, increased the rate hike by 75 basis points, and it still made the market bullish. So this is now on. It looks like that, Bitcoin it's kind of holding strong. It's not going down because of this news. Obviously, when you're looking at the stock market, it also behaves in the same way. And now we will see how it plays out. Do we continue to up to 26,000, which could be the next resistance level, or we are going down? But so far, looking quite good. But don't get too excited. We still, as the data shows, we are actually in a bad shape when we're looking at the economy. But it could be a relief rally, and how long it lasts, well, we don't know that, obviously. Okay, and now move on to the first topic. And the first topic is this topic: recession. Are we in or are we not in recession? Let's look at that. So when we looking at yesterday's data, which came out, the figures, then we can see that the US economy shrank for the 2nd straight quarter. And officially, we call this recession, as you can see it here. And but not everybody is agree with this, because people saying that you shouldn't look just one single data, and maybe because of the GDP in two quarters in a row is negative, which makes it officially kind of recession, but it's not everything looks like as it normally looks in a recession. For example, Janet Yellen is saying that adding that the economy had rapidly grown 5.5% last year, we have a very strong labor market. When you are creating almost 400,000 jobs a month, that is not recession. Then we have here the Federal Reserve economist, Claudia Sham, and she's saying that the consumers, spend, what's happening in recession, spend less, people lose their jobs, businesses cut back on investment, industry production slows down. So there are many different signs, but there is no one indicator. So if you shouldn't really just look at one indicator, which is, for example, now this what we have experienced, the 2 quarters for GDP in a row. Also what makes a recession bad is people lose, jobs, so that makes it bad. They suffer, and there are long-term consequences. So we are not there right now, but there's no guarantee you won't get there. And also inflation is harmful because it reduces your salary or income. Because of your income isn't increasing as much as inflation, according to to this guy, it erodes your purchasing power, your saving, and the value of your house. So while economists agree that we are not currently in recession, so this is what it's saying, the outlook, it's not rosy. So there is a survey of 49 US macroeconomists conducted by the Financial Times and the Initiative and Global Market Fund that more than 2/3 believe recession will hit in 2023. So even if we're looking at the data and we call it now the recession, not everything shows we are recession already, but the 2/3 agree that next year, 2023, the real recession will hit. Also, Claudia Shem believes that there is even a possibility we could avoid a recession because of the stronger labor market. Unemployment rates in June, remained at 3.6%. The same percentage it had been the previous 3 months. And the U.S. job openings also remain high, with nearly 1.9 jobs available for every single unemployed person. That was in May, the data, according to Bloomberg. So what is very interesting now that, the job market is still looking good. And this is, weird, because usually when inflation goes up, then the unemployment rate also goes up. But right now it's not the case. The question is how long this will last, because we have seen already companies, cut their staff, firing people, especially in crypto, but not just in crypto, in many other industries. This has already started, so it can really change, and therefore we might actually hit a real recession, if we call it like this, in next year, 2023. So yes, the data shows, if you're looking at the GDP and the quarters, that we are recession, and it was announced yesterday on the 28th. But the question is that, yes, are we really? Because if you're looking at the unemployment rate in the US, that doesn't look that bad as usually it's supposed to be in a recession. Interesting. By the way, when we're looking at the Eurozone, the economy there actually grows 0.7% in the second quarter, despite gas crisis and inflation, surge. We have the 19 members block registered GDP rate of, that was it, as I said, 0.7 in the second quarter, according to the Eurostat, Europe's statistic office, beating expectation of 0.2. So that's what they were expecting. the growth 0.2, and it turned out 0.7. So it comes after a GDP rate of 0.5 in the first quarter. So actually, in Europe, and we have the war and everything here in Europe, so this also looks kind of strange. Weird numbers, and therefore the market, it's not definitely at the moment so negative. Therefore, you can see that stock it's going up, crypto is going up because the data is out. We do know it, and another important data, and now let's talk about it, was the interest rate, how much they would like to increase it. That was a Fed announcement on Wednesday, and because I made my last video on Wednesday morning and it came out later European time, then I have to talk about it now because this is the first video I'm doing since Wednesday because I was traveling yesterday. So let's talk about that. So yesterday was this kind of recession kind of data, but we have another interesting thing, and this is the Fed hikes interest rate by 0.75% for second consecutive time to fight the inflation. And previously, before the data came out, there were talks about maybe 100 basis points, not just 75 basis points. And because everybody was expecting something at least 75 or maybe actually 100, and when it turned out it's 75, it wasn't that bad. It wasn't a shock for the market. So it kind of priced in, and when the data was out, then actually the market started to grow. And then people actually believed that, yes, we're going to have a negative GDP in the second quarter. Yes, that data came out. Okay, relieved. Okay, we're there, and the market continues. Is it now for good to continue? Obviously not. Well, never is. But the recession, the real one, as I just talked about it still can hit. It still can get worse towards the end of the year and next year. But right now, there is a relief, a little bit, that the data is out. And the next Fed meeting is in September, by the way. So not in August, not in next month. So now there is a 1 month gap, and we will see how it works. Yes, also Jerome Powell said that we actually think we need a period of growth below potential in order to create some slack. But it can easily happen that, if things started looking better, then they will not be that aggressive in autumn. And that can boost a little bit the market. So many questions are still there. But these two things were actually very important this week. I believe many people were waiting for it. Okay, and now the third topic I would like to discuss with you guys is about phishing attacks can happen to people who, are Celsius clients because their emails were leaked. Okay, Celsius, it's already pretty bad that, they fighting here bankruptcy, and they just called, this Chapter 11 bankruptcy protection plan. But now, another bad thing is that phishing risk escalate as Celsius confirms client emails leaked. So what happens? So Celsius depositors should be on the lookout for phishing scam after the company revealed some of its customers' data and had been leaked in the third-party data breach. So according to Celsius, the breach came from an engineer at the customer.io messaging platform who leaked the data to the third-party bad actor. And because this went out, so it wasn't actually Celsius. It was this messaging platform, customer.io, and their employee was the one who leaked the data, got an access to this data, and leaked it to a bad actor. And this can cause a problem in the future. If you do remember, what was it, a year ago already or 2 years ago? I'm just really confused at this time. Time flies just so fast. No, it was in 2020. When there was Ledger, their client's data was also leaked, and people got many messages, fake ones, obviously, phishing attacks. So if you used to be or are Salesforce client, be aware of it. Because of this, you can get fake emails. Always watch out for it. Okay, guys. Well, that's it for today. It feels to be good to be back in the office, not having this bug noise in the background. And because of I'm back, so from next week, from Monday to Friday, every single weekday, you're getting the freshest cryptocurrency blockchain news here on Blockchain Bloom. So hit the like button if you like this kind of content, and also subscribe to this YouTube channel, Blockchain Bloom. Guys, I wish you a great week and see you Monday. Have a good one. Bye-bye.